Dilip Bhat joining in on the show as well. Dilip, hi there, good afternoon. What do you make of the movement in the market, the fact that we're scaling new peaks at a time when, we're in the midst of the second wave of the adverse pandemic? And how are you looking at the situation when it comes to the liquidity flows? Would you describe it as irrational exuberance, or do you believe that there is merit to this rally?
Well, I think one of the observations that I had was the Nifty has almost given a 1,000-point run from the time there was the upsurge in the pandemic in all its intensity. I think since then we have seen a rise in the Nifty of almost 1,000 points. So that brings us to the question of the question which you have put of the irrational exuberance. I think now for quite some time, we all know that the stock prices are significantly ahead of the fundamentals. And the way the second wave of pandemic has happened, I think it has diluted the optimism in terms of the GDP growth that we started off sometime in January, February, or on the eve of the budget. We all thought that maybe this year we are going to see 10 to 11% growth, backed by a good big fiscal deficit, which gave the government the luxury to spend and really stimulate the entire economy. So I think as we stand today, I think some of those parameters have come under increasing scrutiny at the moment. But still, having said that, we all know that the kind of liquidity that is floating in the market, and that could easily be one of the principal reasons why the stock prices are where they are and they continue to go northwards. And why only equity shares? I think you can see the inflation in the price of most of the asset classes. Apart from the precious metals, we have ferrous, non-ferrous metals, commodities, oil. I think you name it and everything is almost on fire. So I think one has to see that as a part of it rather than trying to see that the euphoric movement is there only in the equity. I think we can see across several commodities and several class of assets too. I think that is what really is something that we should be pondering. And going forward, most certainly, I think the overall EPS numbers of the Nifty will certainly be revised downwards than what we started off with. And I think that also possibly is getting factored into the market. But the intensity of the liquidity is something which is also going to determine the continued momentum in the market.
Outlook on the kind of auto sales numbers that came in, and how you're looking at the auto ancillary basket as well. The kind of earnings that we've seen, Motherson, for instance, really surprised the street with a stellar set. Your views on auto and auto ancillary after having had a look at the May auto sales numbers, the kind of volume growth trajectory we've seen, and even the kind of earnings that we've witnessed from the likes of Motherson.
So I think it's going to be a little more company specific as such. So I think the automobile optimism and the buoyancy that we witnessed in January, February, I think the way it has come off in April, now in May, and possibly I think even June can be very safely extrapolated that June also will be nothing great. So the asking rate for the remaining 9 months will go up tremendously for most of the automobile companies. So in that sense, I think people will play more for how the momentum is going to be in the second, third, and the fourth quarter rather than trying to put first quarter in perspective.
Right, okay. Couple of stocks which are in focus. Asian Paints, the comments from the management were very strong. They see demand coming back very strongly. There's, they've talked about always being a pent-up demand in the paint and the decoration sector or decorative sector. Normal monsoon, good for paints. They hope to achieve high double-digit revenue growth in FY22 and could take price hikes, gradual ones at that. That's the word coming in from the management of Asian Paints. Asian, Berger, all of that aside, Dilip, just wanted your sense on how are you viewing paints as a segment, considering they were one of the first sectors to actually pick up in the entire consumption space post the pandemic last year. Still a worthy investment, you think, even after these levels?
Most certainly, I think that's one of the sectors which has held on very well and shown a phenomenal resilience and a tremendous capacity to bounce back as and when the recovery happens. So I think that is not going to be something which is going to be different in this year too, and also in the coming years. So in terms of volume, there is a fair amount of confidence that the paint volumes also will be good. And consequently, I think we'll see that reflection in the financial performance too. So I think the paint companies, especially the frontline paint companies, look pretty good and interesting. Even if they may not give a very great proactive return, but at least it can act as it can provide a good resilience to your portfolio.
On the flip side, though, you've got names like Indocin, Bajaj Auto, Cipla, as well as Power Grid, Tata Steel, and Coal India, along with ITC as well as Reliance Industries, that are a little bit flattish in today's trading session. Dilip, what's the sense that you're getting when it comes to the entire pharma basket owing to the overall COVID wave? We have seen quite a bit of traction building up within this space as a whole. Do you believe that valuations look too expensive at the current juncture, and will you be selective within pharma?
Surely, I think selective is still the right word, because most of the pharma stocks have really performed exceedingly well. So I think some of the stocks that really stand out very well in the current context and looking at the future outlook, I think Sun Pharma looks pretty good and pretty ripe for it to rise. I think the performance has been consolidating, and probably in the coming 2 years, we will see a lot of new developments making Sun Pharma almost, though it's the number one, I think it will reascertain itself at that position. And I think apart from that, I would still go for something like a Cadila, which possibly looks still very good and is still away from its all-time high. And similarly, Lupin is also away from its all-time high. So I think both the stocks look pretty interesting from the medium to long-term perspective. And I mean, something like Cadila Pharma, I think after the rollout of the vaccines, can see the profits really touching almost about 750 to 800 crores from vaccine alone. I think that is the kind of the possibility that exists. So I think both Cadila as well as Lupin really looks pretty interesting even from the current level, despite the fact that it has already moved up quite a bit.
Seem to have lost that audio with Dilip for a second. Dilip, the other space that we've been chatting about is sugar, of course, looking extremely lively, given that the government has brought down the 20% ethanol blending in petrol to 2023. So Balrampur, Dalmia, Dhampur, Praj Industries, monopoly businesses like Praj, they're all auguring very well. I was just chatting with an expert earlier as well on the show that a large part of the move has already taken place. But do you think there is still merit in holding on to these names or even buying afresh at these levels, given that perhaps the long-term story is pretty much intact in the entire sugar and related ethanol space?
I think the product ethanol has really brought in a good amount of visibility, a good amount of certainty, and has eliminated a large part of the cyclical nature of the business, and which is what really ails sugar industry up till now. So I think this particular ethanol is the way the government is going about in its policy for ethanol. I think the sugar companies possibly will make a good amount of money in the coming years. And I think overall, from the current levels, though as what you very rightly said, the sugar stocks have really moved up quite a bit over the last 6 months to 8 months and discounting a lot of the present things. But the way the ethanol rollout is happening, more and more people will look at the cash flows of the sugar industry. And I think that will also inspire them to really go for this particular industry. Though not on a top of the pecking order, but still sugar industry looks pretty good and solid for it to go for another 8 to 12 months.
Sugar and the ethanol story looking pretty strong. That's the word coming in from Dilip Bhat. Let's just see what else is happening in the market. By the way, 15,700 here for the Nifty futures now. Strength on Titan, 6.25%. So it's scaled up to the highs of the day. ONGC, Eicher Motors, L&T, Kotak, Axis, SBI and Bajaj Finance, they're only powering up further as we speak. On the flip side, underperformance from a Cipla, from a Dr. Reddy's, even IT for that matter, Wipro, HCL Technologies, Tech Mahindra, they're all just about sitting on the sidelines. And of course, the biggest drag on the index today is IndusInd Bank. That's down by about 2% as we speak. Dilip, what about this sectoral churn, what's happening in the market? I mean, off late, even the underdogs like Reliance, Bharti, ITC have actually begun the move. What started off with IT, Pharma, played out in some of the, select auto consumption as well as metals names in the last 3 months, now is spreading its wings to even the underperformers. Where are you placing your bets in terms of the next sectoral move?
I think what really is happening in the market is the unabated flow of money, which is there and chasing the stocks, whether it's from the retail, from the HNIs, or at times even the FIIs. I think the churn that happens is, it always happens on a relative basis, that some sector there is a tremendous buying and fancy and that has moved up, and then you suddenly find that some of the sectors and some of the stocks look relatively very cheap. I think that's what is happening with ITC. That is what is happening even with Larsen & Toubro. So I think some of these names really stand out, that the way the churn is happening, and possibly that is the intricate or maybe the definite part of the nature of the market, given the fact that there's so much of flow of money into the markets, which is there. So I think taking all this into account, I think some of the names like Larsen & Toubro, ITC, I think something like even Reliance, which has so badly underperformed in the last 6 months to 7 months, possibly holds out a promise in terms of the relative expensiveness, the stocks when we compare to the other companies. So I think some of these names will certainly attract. And I think also something like even the oil PSUs, they also look pretty interesting from the current levels, whether it is IOC, whether it is HPCL, whether it is BPCL. I think some of these names really will continue to attract turn by turn some kind of attention.